Sure. Hi, everyone. Welcome to the 14th session of our webinar series, Start Your Own Practice, where we have the privilege of listening to many experts from the field who inspired us with their insights on how to be successful in forming our own practice. Our today's session would emphasize on the quality control aspect of practice management, where the importance of quality standards will be discussed in terms of structure and administration aspect of a firm, as well as the quality of the deliverables to the customers. This would be an interactive session. We have an energetic speaker today who would help you to strengthen and boost the performance of your own practice. So if you have any queries, please do raise them directly to the speaker, or else you may type them in the chat box. The speaker today is well known as the former managing partner of KPMG Sri Lanka and Maldives. He has also served as the chairman of KPMG Middle East and South Asia Regional Board, and he was responsible for coordinating strategy and activities of KPMG member firms across 17 countries while he was playing the role of Chief Operating Officer of the regional office. He is also a past president of Institute of Chartered Accountants of Sri Lanka, counting over 40 years of experience in the field of audit and advisory services, who is currently serving as a prestigious board member, helping the corporates with his immense knowledge. Ladies and gentlemen, please welcome our speaker today, Mr. Riaz Mehula. Sir, over to you.
Thank you, Johnny. I hope everybody can hear me. As I think Johnny mentioned, I'm not going to use slides. I'm going to try and make this as informal, like a chat. And I would encourage you to ask questions, even if you midway, if you have a clarification, raise your hand, and I'll try and take them as we go along. The subject today is about the importance of quality control in practice management. So what I thought is that, before we get into the technical aspects of quality control, I always believe quality control in a practice starts with how your practice is structured. And that is very clear, very critical, because if you look at the ISQM1 standard, it talks a lot about what structures you must have in place to ensure that your output, whether it is an audit opinion or an advisory assignment, bears the level of quality that is expected from you as a professional. So let's say you are starting a practice. The first thing that I would ask everybody is, you have to decide what you are going to offer. Are you going to be an audit-only firm, or an audit and tax firm, or an audit, tax, and advisory firm? Why I say that is important, because that will determine how you are going to structure your firm. You will also find, for example, that if you do offer a full service audit, tax, and advisory, advisory operates slightly different to audit. Audit is a perennial type of income, annual audit fee you get, so it's much more assured revenue stream. Whereas in the case of advisory, you can have the ups and downs. You can have very good years, and you can have very years which are pretty down. And also, you will find that if you are going to do a full service firm, the advisory people are what I call a different set of animals to the audit professionals. They're a different breed. You need to handle them differently. You need to remunerate them differently. Because they come from various specialisms, not only chartered accountants, and therefore it is critical for you to decide first and foremost whether are you going to be an audit and tax, or audit only, or audit, tax, and advisory. That's the first thing, right? And mind you, all of these service offerings have quality implications. The second thing is that you need to have a clear structure within your organization. Now, I know some of the firms start very informally, and then you are not sure who is looking after what, and then suddenly you find that things drop between the cup and the lip or off the table, and nobody has taken responsibility because you thought somebody else is going to look after it. So that is important, that you must have clear structure within the organization. For example, if it's a large enough practice, you might have a board which works out what is the broad policy and strategy for the firm. You might have a small excom, which is maybe the senior partner and one or two senior partners with him, who will try and implement what the board uh, decides. And of course, the full partnership council, where all the partners come together, discuss and approve decisions, clear decisions for the practice. Now, that's for a larger firm. Now, when you're a smaller firm with one or two people, then you don't have all of those. But still, it is clear, important that there are certain functions in a practice that are critical. The first and foremost is the risk management. Now, we talked about quality. The quality is often a function of how robust your risk management function is and how robust your risk management structure is. So it's clearly important that you must have somebody who handles risk. You must have, we are a firm that deals with people. We don't produce tables and chairs. We work with people. So you need to have somebody whose responsibility is to look after people. That is the HR side of things. Of course, you'll have to look at the finance to make sure that the finance doesn't run out of control, that you have somebody keeping an eye on the numbers, etc. Right? Of course, sales is a function of all the partners, and you might have one partner tabulating and tracking it, but it is a function that all partners have to perform. So that clear designation of responsibilities, I think, is important to make sure that your firm operates in an efficient manner. The third point I wanted to mention is that, we sometimes plunge into a practice. They say, okay, let's see as it comes, what happens. I have always firmly believed in the need for planning. Right? We tell our clients to plan, but when we don't do it ourselves, like that single is saying, what do I get a put on that story? You see, you tell others how important planning is. I find that lots of practices don't spend time thinking about what they want to do, how they want to do it, and what are the metrics that they would like to achieve. So along with the plan will obviously come a budget, and that budget needs to be agreed upon by everybody. The plan needs to be agreed by not only the top few people, by even your senior team, so that there is buy-in to the plan. And then, of course, you must have a system of reviewing the progress towards the budget, because no point having a plan and then forgetting all about it. And hey, presto, end of the year, you find that you have hit the budget or didn't hit the budget, or you exceeded the budget. So that's not good management, whether it is for a company or a practice, it remains the same. So that's important about the need for planning and budgeting, and reviewing the plans regularly is, I think, a critical thing. Then coming back to remuneration. Now, I know that when you have a practice, one of the recommended practices, and which I used successfully in my own firm at KPMG, is that, you have to incentivize people. So we used to have a 3-tier structure. One is what is called the base pay, which is what you get as a main minimum, and it should be adequate to enable the person concerned to have a reasonable standard of living. And then you have the incentive pay based on what that particular person brings to the table. So if he's an audit partner, the amount of revenue he drives, or the advisory partner, the amount of revenue he drives, or the tax partner, and you therefore give an incentive pay based on what contribution that each offering has made to the overall bottom line. And then, of course, the balance profit will go in the residual based on the share percentage, right? If somebody has 30%, somebody has 20%, somebody has 10%, then the balance will be profit will be. So out of the profit, first part it goes to as a base pay, then you have the incentive pay, and then you have the residual which goes in the proportion of the capital held. It is this I find is a formula that is used by practices around the world and does have the value of incentivizing your partners to drive business growth, because ultimately it is the partners who drive business growth. And if you don't incentivize them, right, for example, if you hold 70% and somebody holds just 5%, right, and whatever effort he puts, if he's only going to get 5% of the profits, then there is not going to be much incentive for that person. So therefore, this structure of a base pay, incentive pay, and the residual equity distribution takes care of that inequity. Then, of course, the fourth point, and I will move on to the quality side soon, is the need to ensure that you have adequate insurance cover. Now, we do take insurance cover for our property, plant and equipment, etc. But in practice management, taking an insurance cover for professional liability is, I think, an important point. Now, I know in Sri Lanka, it's difficult to get insurance cover for professional liability because they don't have much experience on liabilities in Sri Lanka. But I think things are getting better now. The international firms, of course, don't have a problem because they are covered globally and they contribute to a global premium. So, but an insurance cover is, I think, an important aspect that we should look at. A couple of points I wanted to just mention, when we are driving a firm, and this comes from my years of experience, we often make the mistake of having a few service products with us. Internal audit, feasibility studies, 3, 4, 5 offerings. And we often go, when we meet clients, we try to shove what we have to them. We often don't spend enough time listening to the client to see what his problems are. So often what happens is that when the delivery is given to the client, there is a mismatch between what he needs and what you have given him, because you have not spent enough time listening to his issues, and you have therefore not structured your response to be able to solve the problems he faces. I find this is a critical thing. Even clients have told me this, that you guys have standard solutions, you come and shove it at us. That's not something clients appreciate. And therefore, those who are starting out, you see, oftentimes when you listen to a client and he comes up with his issues, the response, you don't have to do afresh. It's often there in your armory. You just have to rejig what you have to be able to come up with the solution that the client needs. So sometimes it may be a combination of limited review or special reviews with the internal audit thrown in, with a little tax element thrown in. So you might find, and all of these are specialisms that you don't have to do anything new. It's just that you listen to what he needs and therefore use the skills that you have to put together a solution that he can use. And that you will find there are much less problems and less risk about mismatch and clients telling you, this is not what I wanted. You have not addressed my issues. So that's on the practice. There is one final point I want to say before I move on to the other area, is that in all my life as a partner and even as a managing partner, one of the important things that I used to always insist on is to have an open door policy. There is because when you have a practice, mind you, you have good news and bad news, right? There is a saying in management where people say that bad news must take the elevator, good news can take the stairs, right? You will never get the bad news quickly enough if you don't have an open door policy, because if you know problems are brewing, you can quickly move in to solve the issues without letting it go out of hand. We often are happy to listen to good news, don't want bad news to come to us. But when you run a practice, you'll have a mixture of both. So that's on the practice side, and I think that is critical if you want to get your quality right. But let's go to this issue of quality, and that's now become a very important aspect for practices around the world. How do you manage uh, your quality? The first thing that I always keep saying is that quality we often think is something that somebody does, somebody does a review, checks it, and then it's done. No, I think quality starts much ahead of that. And to me, it starts with the concept of client acceptance. If you get bad clients, however much you do, you are going to have problems. So you must have a system which looks at the clients that you take on clients that may seem profitable, but they internally can give you much more headaches later on. So a good client acceptance process is an important thing, and that is not something that you delegate to somebody at a lower level. At a senior level, you must have control over whom you accept as your clients. For example, if people want to just help you to help them maintain 2-3 sets of books, no, I don't think you should get into that. It might be profitable, they might pay you money for it, but these issues will come back to haunt you later on. So please, first point of making your quality under control is a question of what I call client acceptance. But it's not only client acceptance. Sometimes when you take a client on for the first time, they look good, right? But somewhere when you do the audit first year, second year, you might find situations or practices which you cannot accept, and you must have the courage to step down. In my career, we have had several cases where we refused to carry on being the auditors. And one example would be, without mentioning names, where if we had qualified a set of accounts, first year we expect them to correct it the next year. Next year also nothing is done, the same thing happens. Then don't think that just qualifying will solve your problem, right? You can qualify once, twice, third time, I think you should then decide whether you want to have him as a client. Because when it finally comes down to when the thing blows up, right, nobody looks at the audit report to see whether you qualified or not, right? They only say, what did the auditors do, right? Oftentimes people have views about what the auditor's responsibility are, and I'm talking audit here. If there is a failure, they often say, what did the auditors do about it? Although we can tell or shout till the cows come home that the audit procedures are not designed to detect frauds, although the newer procedures require us to take cognizance of the fact of the possibility of frauds when designing our audit procedures. But you can't, no point telling people that is not my responsibility. They won't accept it, right? And then you'll find yourself having to be called up before courts and other embarrassing episodes, right? So that's something. This is one of the things I always tell my partners when it comes to accepting a client. If there was an issue and it hits the papers the next day, would we be comfortable being the auditors of that client? That to me, I think is a good acid test on whether you want to accept a client and continue with that client. Of course, once your client is brought in, and this is where I talk about the importance of risk management, because a risk management partner plays a critical role. Oftentimes, in a good practice, the risk management partner should have the ability to even overrule the senior partner with regard to accepting a client if he believes. So that is the level of control or empowerment that you should give a risk management partner. because he has to ensure that the practice in the name of trying to grow the business doesn't fall into an area which is not desirable. So that's on the on that, and that's why I think the risk management partner is an important role. Of course, in any offering that we do, whether it is the audit, tax, or advisory, we always talk about the importance of a quality review partner, an engagement quality review partner, whether it is for an audit, whether it is for a tax, or whether it is for an advisory. Now, I know that in sometimes people don't give adequate importance to the role of the EQCR. You know, people are busy and they just sign off. Okay, said okay, audit, any issues you want to tell me, fine, and he signs off. Now you might get away with it, but if there is a problem that happens and then you have not found it, it can come back to haunt you. The role of an EQCR is uh, to challenge the conclusions that the engagement partner arrives at. And that is a healthy process, because see, in audit, it's all about judgments that you exercise based on information that is made available to you or you discovered during an audit. And the same thing can happen whether you are even doing an advisory assignment or a tax assignment. So the engagement quality review partner's role is to look at the opinions or judgments that has been arrived at by the engagement partner or the engagement team and raise questions, right? Doesn't mean that the responsibility shifts from the engagement partner to the engagement quality review partner, but the responsibility remains with the engagement partner, but the quality review partner or the engagement quality EQCR, as we call him, is to challenge and focus on some of the key issues. I think the new auditing standard, as you know, we have the issues such as key audit matters, etc. If I was the engagement quality review partner, those are matters I would closely look at. The things that are called the key audit matters, whether they are adequately elaborated on, and are they all the key audit matters, or is there any other key audit matters? And particularly look at areas where judgment is exercised. And if that judgment has a material impact, then those are matters on which the EQCR. So EQCR doesn't do, to my mind, a page-by-page review like the engagement partner, but he looks at the critical issues and see how they have been dealt with. So to me, an EQCR is an important part of quality performance. If you don't have an EQCR and if you only have the engagement partner signing off, you're carrying with it a huge risk, because however much diligent you are, remember, we're all human, right? And we may have overlooked a particular issue, either because we are busy or pressure of work or pressure of time. A lot of us work under severe time pressures, so that can have an important. Now, apart from the engagement quality review partner, as we have, you know, if you take an organization as a whole, if you want quality, quality is a thing that is not the last tick in a file. You know, it is a culture that has to be embedded within the organization. And so it has to start from the guys who are out there in the field producing the work papers. They must understand the importance of quality, right? The importance of making sure that attention to detail is placed, and to try and build that into the team. One of the most effective methodologies that practices use is what we call in-flight reviews. That is, don't wait for the audit to have. For example, in our firm, we had a team, a separate team, a QA team, who had the right, and that was authorized by me as management partner and the head of audit, to be able to walk into, pick up any file, even if it has been not completed, and review the file for the critical issues. So when you have that issue, that the teams who are performing the audit or the advisory or the tax assignment, if they know that, you could have a team who will come in and review the files and ask questions, they are much more careful, right? It is also an important learning exercise for them. They understand the value of culture, value of quality, and they do much better as we go on. You will find that the in-flight reviews at the beginning might appear cumbersome and might be resisted, but once people fall into a process, you find it's a very effective way in which you can ensure that the quality of the output of your firm is of a very high standard. The next point that I wanted to say is that, we often do audits, and sometimes even serve on this committee, and we had to question when there are issues. We find that when we talk to the partner, he knows everything. It's all in his head. But on the file, nothing is written. Maybe it's an Asian culture sometimes. We don't write things down. It's all in our head. So when you question somebody on this, you'll talk to the person who did the audit. He knows about it, right? It's in his head, but not on paper. But remember, in the legal point for audits, and I'm talking about audits because that's where you end up in court law often. There is a principle which says that if it is not in the file, it is not done. You can shout from the rooftop, yes, I did it, right? But if it is not in the file, they can always say, no, you have not done it. So you can say, I know this, I did this, I checked that. But if you have not written it down on the work papers, it's of no use. And that's why I keep telling, when you go for meetings, please make notes of the meeting. There are lots of discussions, lot of representations the clients make, right? We all depend on the ultimate letter of representation. Mind you, that's a very general document. The individual meeting notes are often more effective in supporting whatever judgment that you come across. So my advice to professionals is document, document, document. I can't emphasize that more importantly, because that is absolutely critical. Ultimately, your work papers are the proof that you have exercised sufficient diligence in carrying out work. And if there is any time a pushback from the regulator or the client, that is what you fall back on. So the documenting is absolutely critical. I know the institute issued not about some time back a model work papers with a audit manual for startups and smaller practices. I would recommend that. It's very good because that was put together by a team from all the practices, Big Four and others, who basically ensured that if you had all the papers that was there in the manual in your file, you could be reasonably confident that you have fulfilled your requirements. So I would encourage those of you who are starting practices, have a look at that audit manual, make sure that those templates and the papers that are recommended in that manual form part of your work papers. A couple of other things I want to say is this, and this is particularly, I'm talking about advisory reports. For whatever reason, the quality of writing language in our country has deteriorated. And it's embarrassing when you find clients say, look, you guys can't even spell a word properly, or the sentence is gibberish, I can't understand that, right? And even recently, I had an experience where I was sitting on the other side of the table, and a comment was made that, look, this output, and this is from a Big Four firm, right, had had to be proofread by them. Right? Well, that's very embarrassing. This is very basic stuff. But we have to keep in mind the fact is, because of all this language issues that we had in the country, the quality of language may not be as great. Ultimately, we are a business profession, and the language of business is English. So if you're writing a report, that has to be written in English, and little errors, spelling errors, punctuations, all of those devalue the content of the report. In KPMG, I used to have a lady, and she didn't come to office, she was working from home, but every report had to go to her, and I had an arrangement where she had to turn around the report in 24 hours. So before it went to the client, she went through the report. Now, she was not a chartered accountant. She was basically reading the reports to see whether there are any English errors, spelling errors, etc. And believe me, the quality of our outputs hugely improved, because people didn't say, oh, your spelling was wrong, English was putrid, right? They learn to appreciate the quality of our output, because these things like spelling errors and punctuation, etc., didn't dilute the value of the report. So I would recommend, and didn't cost me very much at that time. I think I was paying something like 20 or 30,000 for this lady, a computer at home, one of our computers. So she made sure that confidentially we had agreement signed. She couldn't use that computer for anything else. So we made sure that there was data privacy to the reports. But she's been, I think, for the last 10 or 15 years, she's done that role. But I would recommend that as an important aspect that you should think about when you're setting up. And the final point that I want to say here is that, especially when you do audits, the /MB is going to be there at the back, whether you like it or not. They are reviewing files, not only the listed companies or even private companies, which are large private companies. They always say that in hindsight, you can be wiser. So when they review a file, they will come back with a whole lot of questions. Please, that's where I say that proper notes are critical, right? And if you have not done it or overlooked something, my advice is be straight with the regulator. Don't try to bluff, because when you try to bluff, you can get caught out elsewhere, and that can be embarrassing, right? Ideally is not to get into a situation like that, but if there is something that you have overlooked and the regulators have found out, there's no point trying to bluff and get out of it. Far better to be upfront, straight with them, and then make sure that doesn't happen in the future. So that's on the quality side. Now, you may ask me, when I ask this question, I tell to a lot of other practices, especially the smaller practices, when they start, you're asking for risk management partner, you're asking for this partner, EQCR. Where do I find? I'm just a 1 or 2 man firm. How can I do all of these things? You see, if ISQM now, which is now part of the requirements, these are mandatory. You can't say that EQCR is an option anymore, right? You can't say risk management is an option anymore. Right? So how would you do that? Other than things like client acceptance, which has to be an in-house process, I always encourage smaller practices who have 1 or 2 partners to enter into collaborative arrangements with other practices of your size, saying, guys, you be the EQCR for this, I will be EQCR for one of yours. Obviously, we'll have to make sure that sign agreements that we won't poach each other's client. But these collaborative arrangements where 3-4 firms get together, because today, if you want to implement ISQM 1 fully, to my mind, you need 5 partners, right? And a minimum at 3, right? To implement comfortably, you need 5. At a minimum, you need 3, right? So if you have 1 or 2, then you are going to struggle to comply with ISQM 1. And the way to do that would be to ensure that you have collaborative arrangements with practices, so that you overcome this problem of shortage of resources, I don't know how many of you are aware. In those days, all these one-man firms started because, we had the old government nationalized all the plantations, and, the AG used to hand out audits to, individual people. So if you formed a company, you got 5 or 6 audits, whether you like it or not, it comes, because he had to give it out to everybody in this concept of socialism. But today, that's not happening anymore, right? Increasingly, the AG himself is now realizing that he needs to get larger practices to help him in his role, and therefore it is in the interest of the practices to eventually merge. I'm not saying start immediately, maybe start with some collaborative type of arrangements, but as you go on and you get more confidence working with each other, maybe you could enter into more firmer merger arrangements with maybe a common P&L or not. Okay, I will stop at this point. I know I've spoken a lot, almost 40 minutes or 40. Okay? I will stop at this point and open up for questions if people have, and let's make it a very informative discussion. And I'm happy to share my experience in running my practice.
Thank you very much, Mr. Rihaz Mueller, for that insight on the quality aspect of running an own firm. Indeed, quality becomes so important in whatever we do in our daily life. So when it comes to work, it matters quite a lot. So the forum is open for all the participants today. If you have anything to be clarified from Mr. Mueller, this is the opportunity for you now. So until that, so I have a few questions stemming out of your discussion today. So you spoke about the need for the planning and budgeting of the financial year, how your financial performance is going to be. So when it comes to a small scale firm, a startup firm, this budgeting, to what extent it's going to be realistic? You must be still in the process of assessing how your business is going to be and what kind of client portfolio that you are going to have. And especially in current kind of conditions, the market conditions are so volatile and everything is changing so rapidly. How do you see preparing a budget at the beginning of the financial year and then monitoring the progress of it? How successfully that we can do a budget at this kind of a situation, sir?
Yeah, a good question, Jani. You see, when you're starting a practice, in anything that you do, you don't just plunge headlong into anything. No, you have to look at, okay, if I start a practice, how much of audit work can I generate? But there are ways in which you can do some work to arrive at that number. One common thing that we do for advisory, for example, is we look at companies and see how much is the advisory spend. If you look at listed companies, you know how much they spend for advisory. And then you see how much of that can I try to tap into, right? Similarly, if how many firms are there out there in the market, what are the audit fees of those companies? And then you put yourself a target that I am going to try and aim for 5% or 3% of that expenditure. Now, as you know, it's always a plan. A plan is an estimate, right? You don't just say I'm going to have 5 million worth of audit fees, right? That's fine. You can say that, but then every plan must have. You must reduce that to certain steps to be taken. So how will you take? You will look at what are the new registrations, new companies. What can I offer them? If I can't offer them audit, can I offer them internal audit? We sometimes we only talk about audit, internal audit, but oftentimes, and I am sitting as a audit committee member, there are numbers which are put up. I would like certain assurances on certain numbers. So clients, companies are now not necessarily the whole internal audit hog, but there are specific comfort on certain aspects. So you might not do the full internal audit for them, but you might be able to pitch, right, to do certain specific types of work. Now, one of the things that I started in KPMG is that, we do business valuations, as you know, right? But whenever we do a business valuation, when there is a property, plant and equipment, you need to get a real estate valuer. Right? Now, the real estate valuers we have, unfortunately, in this country don't use IFRS 13. Right? They have their own, methodologies which are often not updated. And then we have to then take that and start trying to, manipulate those numbers to try and make it in line with IS 13, or keep going back to them and say why they should use IFRS 13 as the basis for the values. So finally, what I did was we set up our own valuation firm where we had certain certified valuers joining that. So we formed a company, a limited liability company, right? So when we gave a valuation, we were able to give a valuation with comfort, not only on the business valuation side, but also on the property, plant and equipment side. So I think, as I keep saying, that business opportunities are out there, right? Let us not only look and say, I can only do normal audit, I can do internal audit, and I can do feasibility studies. Even in advisory, there's a whole ream of work. For example, supply chain. People want to know how effective is my supply chain. So auditing your supply chain, margin audits, right? There are lots of little pieces of work, even where the auditors are some other firm, right? A big firm, right? If you are a nimble, innovative person, you can always say, look, and you must choose your niche areas. You can't be a jack of all trades. I always keep saying, if you can be a jack of all trades, but you must be a master of one or two. You must try and get some niche that you're very good at. So people will say, this firm is good for this, whether it is actuarial valuation reports or getting confirmations on a particular item or whatever. That is a thing that you start building a reputation by going into certain niche. So when you do a planning, I always say that you have to start with an estimate. Then you go to back that estimate with certain actions you will take to try and achieve that. And when I talk of reviewing it, what you do is see how effective has your action been. If you are not reached your target, you're falling short, and then you have to decide what are the things I'm going to do to try and catch up. So that's an approach. I know it's like any other. It's like a company. Of course, when you have a company with a history you did in the past, and therefore it becomes much more easier. But when you're a startup, you're starting on a blank slate, and therefore it becomes a little more difficult. But that is what it's all about, getting into new territory and then succeeding in that.
Thank you so much, sir. We have a few questions for us. Someone wants to know how important is computer-assisted auditing techniques if one does not have the staff. Also, if the client IT system does not facilitate such a computerized audit, can one rely only on the traditional manual audit? So the question is about...
That's a good point, actually. Yeah. IT audit, I think that's a very important aspect that we must keep in mind. Lots of companies, even smaller companies, are going into IT, right? At least they are computerizing certain aspects, because whether it is their stock control systems or others, and trying to do a completely manual audit is not easy. It becomes very difficult because you don't have the audit trail that we normally used to do, where we can go and tick, right? You have to therefore use audit tools. The good thing is that there are lots of audit tools that are out there now, which are much more cheaper. You don't have to have the very expensive audit tools, but there are lots of tools out there which you can use, get familiarized on, and use that. Lot of us, when it comes to IT audit, we just restrict ourselves to what is called a general IT questionnaire, Now that doesn't help. That is only how is your IT controls and things like that. But now with the increasing level of computerization that companies are going into, you need to use some of these tools to interrogate the files, and help you to see whether get a greater understanding of the behavior of the numbers therein. So computer audit or IT audit, as I call it, or IRM as we call it, as an important component of audit. The good thing is that lots of young people who are now qualifying are very IT savvy, the young guys who are quite savvy on IT. So getting young people trained on use of those tools is not as difficult as during our time. For example, we take our vintage, trying to familiarize with some of the tools is not easy. But with young guys who have grown up with computers, right, it is easy. What happens if you don't have, right? And that's where again there are, when I talk of niche, you might specialize in IT auditing and then tell others, look guys, I will do this for you for a fee. So you can subcontract the IT review part to a firm which is specializing on that, right? So these are different methodologies in which, so when you, as I said, you might not be a traditional audit tax advisory firm, you might be a firm which specializes in IRM audits only. Maybe because you're very IT savvy, you have a great team, you've got great tools, and you have licenses which you can spread over a lot more clients, and therefore the cost per client becomes much cheaper, right? So these are ways in which it can be done, but I do agree in the current context, trying to do an audit without an IRM resource becomes extremely difficult and can have a huge bearing on the quality.
We have another question from a participant. With reference to report being reviewed by an external consultant for quality, shouldn't this also be covered in the EL, hope it's engagement letter, vis-a-vis confidentiality of the information?
Yes, you see, normally the EQCR is a requirement of the audit methodology, right? It's a quality. If you look at a client, if you want to do an audit, and engagement quality review is a recommended process. So if you have a process, because we had this issue ourselves, because for example, clients say, can you get some out? Because we had, for example, reviews done by outside the country, people who come and review our files. But the law is clear. If your methodology provides for an engagement quality review as part of your quality review process, then you are okay, because after all, the person who is reviewing will have signed NDAs, etc., to make sure that he will not divulge the secrecy, right? So you don't have to worry too much about the client saying somebody else is looking at my numbers, because that is part of the audit process.
So there's another question on what's your view on government audits, the quality controls of the governmental audits in Sri Lanka for past so many years?
To me, see, I think the government audits actually require more intense review, because you see, unlike, I think a lot of you know, the AG, when you do a subcontract to an AG, you are not only doing a financial audit, you are doing what they call a value for money review as well, right? So the AG wants you to look at wastage, inefficiencies, etc., right? So to me, whether it is a private company audit or a government audit done for the AG, the quality standards are the same. You have to have the same EQCR, you can have the same quality process, right? You'll have the same process whether you want to accept a client or not, your same process whether you want to continue the client, no difference. But sometimes I think a government audit has greater onerous responsibility on the practice.
You all can share your questions to the chat box if there's any. Um, this is a question from my end, sir. So,
Yeah.
when it comes to qualifying an audit opinion, even for a well-established audit firm, qualifying an audit opinion, it requires a lot of negotiations, discussions with the client.
Yeah.
For a new startup audit firm, how confident an audit firm partner should be? You being new to the field, and you must be having very few number of clients with you as well. Still, there's a requirement for you to issue a qualification on the audit opinion. How do you think an audit partner should really move forward with this kind of situations?
Yeah, very good question. Qualifying an audit opinion is a very, should I say, very onerous responsibility. You don't qualify just like that. You have to have very good reasons why you qualify. That is why we have a provision in our own firm that if anybody is qualifying an opinion, he has to get that another partner has to review and agree that the qualification has to be there. So we want to make sure it's not only the engagement review partner, when it comes to a qualification, that qualification has to be independent looked at by another partner who will determine whether that qualification is warranted or not. Because sometimes we jump the trigger and qualification is sometimes may not be the answer. And there are different levels of qualifications. As you know, it can be an uncertainty, it can be a disagreement. So depending, or it can be emphasis of matter. So depending on what it is, the qualification, of course, as I say, is something that before you even qualify, you'll have to get independent somebody's another opinion to say whether am I justifiable in asking for the qualification. But if you are qualifying, then you must qualify. There's nothing else. You don't want to risk it. But oftentimes clients don't like when you spring surprises at the end. See, this qualification, when you start an audit and go through, you often know where you're ending up, right? You don't wait till the last moment and spring a surprise on a client. If you find that there are some issues that are coming which can lead to a qualification, you must address this matter very early with the client. Tell him upfront, look, there is a problem coming up, right? We have issues, help us to solve it. Oftentimes it is some stock reconciliation, not that, or some debtors reconciliations, or certain things. And invariably, the qualification arises because you have raised the issue at the last moment, and the client has no time to fix it, and there are time pressures in getting the audit out, and therefore the only way is the qualification. So raising the issue well ahead, Jani, is a good thing. So I always keep saying, see, unlike those days when our time on audits, the partner looked at the file at the end. See, you send up people, do the audit, he does the ticking, bashing, comes up, the manager reviews, then he comes a partner. Partner looks at the file last. It's not different anymore, right? Now the audit process requires to lead the process. So the partner has to be involved in the planning. So when he involved in the planning, he will have to, for example, see what is the strength of the controls, what are the process, what are the likely areas where there can be huge judgmental issues. And that will help in drafting the audit plan. And that will also help him to bring these issues before the client well ahead and say, this, unless it's resolved early, can lead to a qualification. So please work on it and get it sorted out.
There's one more question, sir. In the case of a client that is SMI, wherein there isn't one particular risk which negates a risk management audit approach, what percentage of coverage is adequate? That is, what is the absolute minimum to provide comfort? Would 20% or 30% be sufficient given time constraints?
Okay, you see, it's all facts and circumstances matter. right? Especially when you are doing SMEs, you will find that they are small. The internal controls are less because they have less people, right? And therefore, when we do SME audits, you will find that substantive audit processes become the critical process rather than analytic, rather than testing the control environment, etc. Because often there is no control environment to test and rely on. So when you can't rely on the control environment, then you fall back onto the substantive test. So how much of testing we will have to do, I don't think we can give a magic number. If, for example, you select a 10% sample, and if you find no errors in the 10% sample, you might even say, okay, that's it. But in the 10% sample, when you're vouching, you find errors, you will increase the sample to 15, maybe 20, maybe 25. If there's a whole lot of errors, you might even do a 50% review. So the percentage cannot be one magical number. It's a function of the outcome of the substantive test that you do. You also do, I always keep saying, for SME audits, two things are critical. The substantive audit, which is the vouching, etc. And an important part of substantive audit is an analytical review. See, if you know what the number should be like, and if it is not there, then you must start asking questions.
Thank you very much, sir. So we've come to an end of today's session.
Yeah.
Hope with the limited time, these are the number of questions that we can actually consider at today's session, but you can always clarify anything that you want from Mr. Mihla, if you have anything else to be clarified. Thank you so much, sir, for your the time invested, and we actually realized how important the quality control is. I myself have experienced when it comes to the audits of KPMG, to what extent we've given the priority and importance to the quality of our deliverables in all the units, including advisory, tax, and audit. So it was a really good learning session that we had with you today. Thank you once again for your valuable time with us. So ladies and gentlemen, all the members, I hope you benefited from today's session. We would call it a day, and we will see you with another session much sooner. So all the very best, and take care, everyone. Goodbye. Thank you, sir.
Thank you. Thank you, Johnny. Thank you for excellent sharing of this session. And as I said, if anybody needs help, feel free to call me. I'm more than happy to share my experiences. Thank you.
Thank you, everyone.
Bye-bye.